huge voice on this day where we've breached 26,000 for the first time since 30th of September 2024. We have Samir Arora, founder Helios Capital, joining us. Hi Samir, this is Harsh here. Great having you here, Samir. Give us a sense. We've seen sustained outflows, especially on the FI side of things. Do you believe that that can change over the next year or so? Will this somewhat see a huge shift in terms of outflows, given the outperformance that we've seen in by other Asian markets versus India? Do you believe that now India looks much better placed for inflows to begin?
Well, actually, that seems to have already started, or at least the selling seems to have bottomed out. Because if you see last 7, 8, 10 days, broadly it is zero to a little bit plus in terms of FI flows. But if you do big picture in the last 25 years, maybe in 20 or 21 years, the flows are positive. So the normal default is for flows to be positive because FIIs also get more money from their investors, which could be, or they themselves are investors like sovereigns or central banks or endowments or whatever. And so that is a big picture. Now, once in a while, we have some issues either related to India or the relative attractiveness of others. So, therefore, in general, unless we had any specific negative things to say about India, we would say that the FIIs will normally be investing. And this has become a little bit more higher confidence because of the fact that in the last 30 odd years, India has never had this big an underperformance relative to emerging markets, something like 27, 28% just in this calendar year. So yes, I've been confident for many months. But then when in March, April, May, June, FI flows became positive, but then because of the 25% additional tariff that came, and then the H1 issues, and in general, bad talk about India, as if India was being targeted and dealt with separately, I think that made people nervous. I would think FIs will come in if they have not already started that.
And Samir, financials is one place where FIs will likely bite into, right? Because it's a large sector. The other sector which traditionally FIs have bitten into is IT. But that doesn't feature in your portfolio. Give us a sense as to how do you play
So
that
I
trade of
think
flows coming back?
I think FIs coming back, the first highlight will not be that they will buy these sectors, but that they will stop selling these sectors. And because if they have been in the past, what would have been their portfolio for anybody who's been around in India for 5, 10 years or more, would be to have the large financials, large IT, large consumer. And therefore, now over time, you can see them changing their portfolio already. That when they sell these big stocks, on the other hand, they go and buy IPOs and QIPs of mid-capish or newer companies, because for 1 or 2 or X% of their portfolio, not more than 2%, they seem to be shifting from these larger names to these new, larger, older names to these newer names. So I would think that if they stop selling, first of all, they don't even have to buy first. If they stop selling, the financials will do well because they are otherwise doing okay. In IT, the issue is that the sector is not doing well. So it is not just that FIs didn't like, did not buy them recently because they were selling the whole of India. I mean, if you see that there is so much uncertainty, and even if we talk about India US deal happening, which was the trigger for today, that actually helps the local guys. It doesn't help the IT guys in that sense because the IT, other than H1, was free, and it all depends on what is happening to US. In fact, the biggest risk to the world right now, if there is a risk, which is not much of a risk, but if people believe there is a risk, that is that the US market and US growth and US earnings have been overextended. In fact, last week I saw a report from UBS saying there's some, I forget, 90% probability that US goes into a recession. So I will not buy so easily. Some FIs are most welcome to buy. That is only the way we can outperform others.
Morning, Sajid here. What's your take on PSU banks? They've been running up and they've been the outperformer compared to the private sector banks.
Yeah, that is true. We have only one. We have only State Bank. And but now we will not buy. We are okay with these larger names because we have a lot of otherwise mid-cap names and newer names. And so since we are performing well, we've not had this pressure of trying to move it around. You see, what happens is when I have to buy something new, I must sell something. And if what I have is also doing well, plus minus, then I don't get this desperation. So right now we are doing okay. That means they are doing well, but something else also doing well, and we seem to have that. So maybe many sectors are doing well, but we have not overly focused on trying to desperately say, "Oh my God, we are underperforming. Let's quickly find these happening sector, which happens to be say, which I didn't know exactly, but since you say it must be, which is this mid cap kind PSU banks, because the largest we have, which is State Bank, and doesn't seem to be doing much."
And how much of cash you're holding on at this point in time? Are you looking at more opportunities, or you've
We
already deployed most of your cash?
we don't hold any cash mostly at any point. Today, our cash, I don't know about the mutual fund exactly, very recent, but generally they'll be holding 0.5%, 1%. I don't hold any cash because I am long short. So my book is more than 100. So I'm always borrowing from the futures market in the sense that because I buy futures for a small part, that means I'm actually never having cash. Cash is not part of the game.
From a futures point of view as well, you've seen the FIs long positions, going up to almost 19% in the last 4 or 5 trading sessions. There has been short covering that has happened. What's your take on the market from their point of view?
So that's what I'm saying. As I said, normally FIIs buy. This time, you can give some reason. Initially, we can say for Jan and Feb and previous year, that is 24 September, where the real selling happened. The world, because who knows exactly, but you can attribute it to in September, the Trump prospect of coming in, and then when Trump came in, the whole world was bullish on US. But after the March-April decline because of tariffs and the policies which seem to be not consistent or not stable, then there was a lot of selling in US. That is in March-April period, or maybe Feb also, but March, April. So that I don't think that the world is willing to completely put that back in the US, even if the US market has done well, because the rest of the world has also done well and actually better. So just to give you some stats, year to date, US, let's say S&P must be up, I forget now, but in the range of 13-15%. And the world, excluding US, is up some 25% this year. So there has been no loss of return because you chose not to put that money back into US but into rest of the world. And if you do that, then India also has a logical claim to that money. If you're anyway little bit reducing your exposure to US, but still we had outflows. And that is what I was attributing to the specific action that were taken in terms of the tariff and all, which looked as if India was somehow in the bad books of US. And now if that changes, I think you will get flows. So I've been bullish for the last 2-3 months and actually before also, but particularly on FII flows, saying that it's not bad. These are all 1-2 month type events. And the Indians are buying, and foreigners, they don't even have to buy a lot. If they just stop selling, that'll be enough. And then it's not that we are going to make obscene returns, but to make 10, 12, 15% type return, which is in line with India's corporate earning growth for this year. Uh, Actually, this year means going forward 1 year. Looks reasonable and fair, and that I think we will get.
This is Snehi also joining in. You're optimistic on FIIs returning. The earning season so far has been good, especially for large private sector banks. We're inching closer to a trade deal as well with the US. Is it a good time now to conclude that only good days are ahead, or is it too early to come to that conclusion?
Well, I've been saying good days for the last many months. And actually, you may think that is it a good time or a bad time, but in September, everybody's NAV was up, something like 2.5%. It's not bad. This month, I think we are up some 5-6%. So it is already happening. It is also already happening that the FIIs are not selling. Actually, I don't think in the last 2 weeks they would have sold on, they are plus minus zero, but it's not a big round of selling. And it is clear that there is some progress on the deal. Actually, till yesterday, we all thought that big progress, but now today, I think the market is a bit disappointed by reading that Prime Minister Modi is not going to Malaysia or wherever this I think it's in Malaysia, because then people thought maybe he'll meet Trump there and the deal will be like not signed there, or but broadly more shake of hand and all that. But generally, it's happening plus minus a few weeks, I think. And then year end is also always generally positive for markets in general. That is November, December, Jan is generally always positive. Plus this GST response and all these things, and the interest rate cuts and the tax cuts, and that you have squeezed out this gambling where there was a leakage of money in the middle class hands. All that is going to plus minus a few months lead to, as I said, not great 20% type returns for the market. But yeah, why not 10, 12, 15%? And then it depends on stocks. We launched a mid-cap fund in March. Who would have thought some great time? It is up some 28% and things like that. So in between, you get these periods, and broadly, you're making enough to not feel that you could have done something else with that money. That is the only criteria, that, oh, I wish I had not invested, or I wish I had bought real estate, or I wish, maybe other than gold, you're broadly okay in life.
Samir. Samir, what about gold? Do you like it even now?
I have always liked it, but I am not saying buy it, but you can keep it. I have it in my global fund 5%, and personally, I may have 8-9%. And I've actually bought even physical gold as back as 2008. I even kept it in a safe. I've done many things with gold because I generally feel that a little bit of gold is okay. But this price seems a bit too much, too fast. Other than that, there's no, you could justify it. Basically, the bet is that, not the bet, the insurance that the dollar is under attack because of, not because China is doing something or other countries are doing something, because your deficit is too high. And even the Federal Reserve governors, I saw his press conference, I think 2-3 conferences ago, when he does after the meeting, and he was saying that the path is unsustainable of the deficit. Not that today it is good or bad, but if you have it for a few more years, it is bound to eat away a large part of the revenue, and therefore you don't have enough, and the only way out is depreciation. Then you saw Ray Dalio write a whole book basically on this, when nations go broke or when countries go broke. Then you saw Elon Musk having a fight on this basis that this is unsustainable. For you, that you need 5-8% insurance if you are a dollar exposed like NRIs are, and I am with my global fund and everything.
Samir, when I'm looking at your portfolio and the construct of it, your top stocks, within the 10 top stocks, you have 5 stocks within the financials basket and 2 stocks within OMCs, which is not as sexy a business, if I can call it that. Give us the sense as to the skew with regard to the top stocks that you have in your portfolio.
So you haven't seen my portfolio, because what you are seeing is the mutual fund portfolio.
Sure, yeah. So,
Mr. Irani. But big picture, financials we like.
yes.
In financials, we like the banks, these 2-3 banks, HDFC, ICICI. We like Bajaj Finance. It's an easier play on consumer and GST. And yeah, so we had it before also, but I'm saying in today's context, then to try and figure out who will buy a phone and who will buy a TV and things like that. In OMCs, is it? I own only one, HPCL. I didn't know they own 2 of them. So they own BPCL, I think, in some of them. But I don't know where you saw 2 oil companies. But we like HPCL and we've held it for some
It has
time.
HPCL and BPCL, Samir. So I'm referring
So
to
I
that
don't know
one.
which portfolio. Okay, maybe. Because I own in my offshore fund only HPCL.
Understood.
We like it.
But is there merit to it even now? We've seen a fair bit of outperformance there. Merit to continue to hold.
See, the merit is as follows, that the government has you recently saw the oil minister do a full analyst meet sort of thing directly showing that they are so committed. The CEO of HPCL has come from private sector. He was, I think, in A.T. Kearney. He was going to be the global CEO, and for him to join HPCL as the CEO means that from his side, he thought that the government will give him room to do things. And from the government side, to have at the top level a private sector guy who obviously has come with certain goals, obviously without any this thing, you can see that he was not being fired. He was running in this to be the chairman or whatever of the total worldwide. And so he would have taken a salary cut and things like that. So that is there. But on the other hand, you've also seen that the government allows these companies to make money when like oil prices are so low, but the oil price is not cut. And then one day there'll be Bihar election and or something, and you might have a 2 rupee cut, but that just means you treat it as a running account that the government has with these oil companies. So in good times for the oil companies, you're allowed to make more money. And then sometimes you have bad times in the sense that oil prices go up and you cannot increase. But if you see it as a running account over many years, you are allowed to make enough money and retain more in times good for the companies, and maybe a little bit be suffering in that sense, but knowing that either you have an old buffer or that when the times turn, you'll be allowed to recover it. So if you treat it like that over a 2-3 period, they are making good money and very safe. And also now these new things of a private sector CEO means that efficiency and maybe trying to do new things or other businesses related to it, unlocking of value. There was this talk in the past to separate the lube business. All these things, some of them can be done if the private sector guy and the government are agreeing. And you can see how aggressive the oil minister is in coming on the front foot and directly doing an analyst meet. It was not done by the companies. It was done by the government, you can say. So if you are saying oil, you are saying PSU banks, I say PSU oil.
Samir, what's your take on FMCG companies? Many of them have guided for muted growth in Q2 and maybe recovery happening in the second half. Your HULs, Maricos, and the Daburs of the world.
Well, we have Marico across our funds, but in general, I don't like them much because the growth rates are too low for my interest. And secondly, the competition is from private companies and foreign companies, not foreign, I mean, but private companies and startups. Plus, according to me, the what should I say? The consumption basket of the individual, I think, has changed. So if you give him more money, because there's rain and things like that, in the past we used to run to buy all these consumer companies. Now I think the consumer has more choices. You can, of course, use money for data, but I read that just this this thing in terms of equivalent to airports and all, or even normal this thing for listening to music and seeing YouTube and all that, the amount of money being spent by Indians is some $6-7 billion a year, which I assume was plus minus zero, say 15 years ago. So the same money public has, there is no this thing that they will upgrade their soap or shampoo because they have more money or because you've got GST. That saving would be spent in things which did not exist, or your preferences have changed, and therefore the basket has changed, and therefore the growth rate of the well penetrated sectors is very low, and it's just too boring for us, at least for me.
All right, Samir, we'll let you go on that note.
Thank you
Thanks so
very
much for
much.
joining us, giving us that view.